What is up everyone, and welcome back to the channel. This is Explain the Charts. Today is October 13th, 2025, and we are taking a deep dive into Litecoin, or LTCUSD, which is currently at a fascinating and volatile crossroads. The news cycle for Litecoin has been absolutely explosive, driven primarily by the immense hype surrounding a potential spot Litecoin ETF approval. Multiple sources, including CoinJournal and Benzinga, report that analysts are overwhelmingly bullish, with some calling an SEC approval a done deal. This optimism has led to some wild price predictions, with targets ranging from $275 all the way up to $400, and even a long-term call for $750. This sentiment was fueled by filings from major players like Canary Capital, Grayscale, and CoinShares. However, this bullish narrative was violently interrupted just a few days ago. As reported by AMV Crypto and CoinMarketCap, Litecoin plunged dramatically, with some reports citing a drop of over 23% on October 10th and others a 51% flash crash on October 12th. Triggered by geopolitical fears over potential U.S. tariffs on China. This has created a classic battleground scenario in the market. On one hand, we have the powerful fundamental catalyst of a potential ETF, which could unlock massive institutional investment. On the other hand, we have extreme macroeconomic sensitivity and technical damage from the recent crash. Interestingly, data shows that during this dip, trading volumes surged over 125% and exchange outflows increased, suggesting large players or whales were aggressively buying the dip. This sets the stage for our technical analysis, where we'll see how these conflicting stories are playing out on the charts. Looking at our daily chart, we can see the broader story of the past year for Litecoin. After a period of consolidation in mid-2025, we saw a massive run-up starting in November 2024, which aligns perfectly with the initial hype building around the spot ETF filings. The price rocketed from the $65 range all the way up to a peak of $147 on December 5th. Since that peak, the price has been in a wide, volatile range, essentially moving sideways between roughly $90 and $140. Now, let's address the elephant in the room. This massive red candle right here on October 10th. The price opened near $126, plummeted to a shocking low of $54.94, and then managed to close back up at $97. This candle tells a story of panic selling, likely triggered by the macro news, followed by significant dip buying pressure, which is confirmed by the news reports of whale accumulation. The sheer range of this candle demonstrates the extreme level of fear and greed currently battling for control of the market. Since that crash, the price has attempted a slight recovery, closing at $99.07 on October 12th, but it's clear we are in a period of intense indecision. The primary resistance to watch is the $130 to $140 zone. This is the area where the price has been rejected multiple times since last December. A clean break and hold above $140 would be an incredibly strong bullish signal. On the downside, the first major support level sits around the $85 to $90 area, which acted as a floor multiple times this year. However, the ultimate support is now the low of that crash candle, right around $55. Let's zoom in on this recent period of volatility by filtering our daily chart to start from October 1st. Here you can clearly see the run-up fueled by ETF optimism at the start of October, taking the price from $106 all the way to over $128 in about a week. Then, on October 10th, the market collapsed, wiping out all those gains and more in a single day. The subsequent candles on October 11th and 12th are crucial. They show that sellers could not push the price lower and that buyers stepped in. We see a small-bodied candle on the 11th and a stronger green candle on the 12th, indicating a fight to establish a bottom. Currently, the price is wrestling with the psychologically important $100 level. This area, which previously acted as support in late 2024, is now a key pivot point. Failure to reclaim and hold above this zone could signal further weakness. Switching over to the 1-hour chart, we can get a much clearer picture of the battle since the crash. After the initial drop, the price has been making a series of higher lows, which is a short-term constructive sign. However, we are also seeing significant resistance. Notice how the price has struggled to break past the $102 to $103 area multiple times over the last couple of days. This is forming what looks like an ascending triangle pattern, which is typically a bullish continuation pattern. However, patterns can fail, so we must watch the boundaries closely. A sustained break above the horizontal resistance around $103 would be a bullish signal for the short term, likely targeting the next resistance level around $109 to $110. Conversely, if the price breaks down below the ascending trend line, currently around $97, it would invalidate the pattern. That could open the door to a retest of the post-crash lows around $92. For our active traders, let's briefly jump to the 15-minute chart to see the immediate action. In the last several hours, the price has been consolidating in a tight range, coiling up for its next move. The price is hovering right around the VWP, indicating a current state of equilibrium. Traders should watch the immediate high of this range, around $102.30, and the low, around $98.70. A breakout in either direction on this time frame will likely dictate the momentum for the next several hours. The volume has been tapering off, which often precedes a significant expansion in volatility. Alright, let's pull back to the daily chart to recap and look ahead. The situation with Litecoin is incredibly tense and presents both a massive opportunity and significant risk. Let's summarize the key price levels you absolutely must have on your radar. Your critical support zone is from $85 to $90. A break below this would be very bearish. The ultimate line in the sand for the bulls is the recent crash low around $55. Your key pivot zone is between $100 and $105. Reclaiming this is the first step for any bullish recovery. Major resistance stands firm at the $130 to $140 level. Breaking this is the key to unlocking higher price targets. So, what are the potential scenarios? The bullish scenario, which I would place at about a 60% likelihood, is driven by the ETF narrative. If we get confirmation of approval or even a strong, credible rumor, we could see a powerful surge. The conditions that would reinforce this are a decisive break and hold above $105, followed by a successful test of the $130 resistance. This would align with analyst predictions targeting $200 and potentially higher. The bearish scenario, which I see as a 40% likelihood, would be triggered by an outright ETF rejection, another significant delay, or more negative macro news that spooks the entire crypto market. The warning sign would be a failure to hold the $90 support zone. A break below that level would signal that the fear from the recent crash is taking over, potentially leading to a retest of the lows in the $70s or even lower. The most important things to watch for are any official news from the SEC regarding the Litecoin ETFs and the resolution of the U.S. government shutdown, which is currently holding up the decision process. Always keep an eye on Bitcoin's price action as well, as it often leads the market. Thank you for tuning in to Explain the Charts. Please remember, this content is for informational purposes only and is not financial advice. Cryptocurrency markets are extremely volatile, and you should always do your own extensive research before making any investment decisions.